Hello, everyone. I'm Jeff Thompson, President and CEO of the Institute of Management Accountants, IMA. Before we get started on this open SAP course, let me tell you a little bit about the Institute of Management Accountants. We're approaching nearly 100 years of service to society and to organizations. We have about 112,000 members around the world in 140 countries. But you might ask, what is management accounting? Management accounting consists of corporate accounting, corporate finance, operations, and strategy management. We're very proud of the programs we offer at IMA. We're really proud of our certification, the CMA certification, Certified Management Accountant, which tests credibility and credibility in all of these knowledge domains. So let's get started on an introduction to Unit 1 of a thought paper that I wrote called Improving Confidence in Sustainability Data. This is actually a thought paper that I co-authored with two gentlemen, Brad Monterio, who's an expert in integrated reporting and sustainability performance, as well as Robert Herz, who is the former chairman of the FASB, the Financial Accounting Standards Board. So in this introductory unit, we're going to define sustainability information and explain why there is a confidence gap in sustainability reporting. But before I do that, I really want to take a moment and describe the bigger picture, the call to action, the sense of urgency. And to do so, I'm going to read from part of a letter written by BlackRock CEO Larry Fink back in January. And of course, BlackRock is the huge institutional investor, multi-billion, trillions of dollars in assets, very, very large, lot of influence on investors and investor needs. And Larry Fink said the following in his letter back in January. To prosper over time, every company must not only deliver financial performance, but also show how it makes a positive contribution to society. Companies must benefit all of their stakeholders, including shareholders, employees, customers, and the communities in which they operate. Without a sense of purpose, no company, either public or private, can achieve its full potential. And let me read you a headline from a recent article in a newspaper, a major newspaper, from two luminaries in business, Jamie Dimon and Warren Buffett. Jamie Dimon, of course, is the CEO of JP Morgan Chase, and Warren Buffett is Warren Buffett. And the headline read as follows: Dimon Buffett, stop quarterly forecasts. And what they said was the following: financial markets focus on short-term results harms the economy. In fact, Jamie Dimon is member or chairman of the Business Roundtable, which is an association of nearly 200 CEOs trying to eliminate short-termism. They say the following: quarterly guidance often leads to an unhealthy focus on short-term profits at the expense of long-term strategy, growth, and sustainability. So, the bottom line and the call to action, the sense of urgency is we all want strong capital markets. Strong capital markets are good for society, good for economies, good for organizations, good for individuals. Sustainability performance data is part of telling the organization's story of strategic success, of value creation, generation, and capacity. But if this data is so important as we'll define it, how do we improve confidence in this type of data? And that's where a framework called COSO comes in. COSO is an internal controls framework that gives greater confidence to stakeholders over all types of performance data. So, sustainability information affects all kinds of business outcomes. When you think about innovation, when you think about climate change, when you think about population growth, when you think about carbon footprint, they all have financial implications. One's a leading indicator, the other's a lagging indicator, but they both work together to describe the overall performance of the organization. So think of sustainability information as including both financial and non-financial type information, because it's all about the sustainability long-term of the enterprise. Sustainability data, though, is a little bit different than pure financial data. And that's why the internal controls discussion is so important. Sustainability data, critical to drive, measure, and evaluate business performance, but it's a little bit different than financial data in the following way. Sustainability information, whether it's climate change or other water consumption factors, for example, innovation, governance, the soft factors, if you will, are often qualitative in nature. They often are longer term in nature. To measure and assess their performance often requires more business judgment. So assuring financial data, which tends to be more short term, governed by specific standards, well-defined, well-sourced from ERPs, is much different from an internal controls and confidence perspective than is sustainability information. And the reality is that while all companies, especially public traded companies, assure financial data, relatively few companies today provide assurance over non-financial or sustainability performance data. So we've referred to COSO a few times and implied that the internal controls framework applies to all types of information, whether it's quantitative or qualitative, short-term or long-term. COSO says the following, and this is right out of the 2013 internal controls framework. The COSO framework has been enhanced by expanding the financial reporting category of objectives to include other important forms of reporting, such as non-financial and internal reporting. So from the very beginning, in fact, this is from the original 1992 internal controls framework. So even way back then, COSO internal controls was always meant to apply to all types of data, not just financial data reported on regulatory or statutory reports. And further, COSO defines internal control as follows. COSO internal controls or internal controls is a process affected by an entity's board of directors, management, and other personnel designed to provide reasonable assurance regarding the achievement of objectives relating to operations, reporting, and compliance. Now, reasonable assurance is different from absolute assurance. When we're looking at current or emerging risks to our performance, and we need internal controls to mitigate or manage that risk to an acceptable level, we cannot provide stakeholders with absolute or 100% assurance. The best we can do is to provide them what's known as reasonable assurance, whether it's financial performance data or non-financial sustainability type information. We're going to be referring, as we move forward in further units beyond this introductory unit, to various frameworks besides COSO, which, as we said, is a framework for all types of information. We've already talked about IMA and its role in society and advancing the profession. IFAC is the International Federation of Accountants. It's 175 member bodies around the world whose goal is to advance the accounting profession for societal and organizational good. NACD, the National Association of Corporate Directors. This is a US-based organization which basically represents boards of directors. As you'll see as we proceed into further units, the role of the board, setting the tone at the top for sustainability information and internal controls, is absolutely critical. And then finally, we're going to be referring very often to SASB, another US-based organization, or one of the US-based organizations, Sustainability Accounting Standards Board. That is another nonprofit organization, and SASB is in the process of releasing standards or measures for 80 industries that have sustainability type information. And this will help achieve a level of consistency in comparing organizations in a particular industry in terms of how they're doing in sustainability performance data. A little bit more about COSO. We've been teasing you with COSO and what it is. We've been referring to the framework, the internal controls framework, but COSO actually consists of a group of organizations and a group of people. COSO was founded in 1985 as the Committee of Sponsoring Organizations, essentially put together as an act by the US Congress to deal with some of the savings and loan frauds of the mid and late 1980s. Congress turned to COSO to help develop an internal controls framework given all of the breakdowns in fraud and internal controls. IMA is one of 5 founding members or sponsors of COSO. Additionally, AAA, the American Accounting Association, which consists of the educators, FEI, Financial Executives International, IIA, the Institute of Internal Auditors, and AICPA, the American Institute of Certified Public Accountants, which comprises nearly 1 million members around the world. And by the way, all 5 of these organizations are now global organizations, whereas back in the mid-1980s, we were very, very US-centric. So that concludes our introductory unit to the call to action, improving confidence in sustainability information. And we look forward to Unit 2, where we're going to describe the COSO internal controls framework in greater detail.